As most of you know, we track 25 leading indicators through City National Rockdale. And as you can see, as the economy has been slowing and the talks of recession, there's nothing green, it's mostly yellow and red. And it's been that way for a while. So just to let you know, though, we are starting to see a little bit of light at the end of the tunnel. For example, the U.S. economic outlook from last month to this month has continued to improve overall. The international economic outlook, you can see that internationally, the economic scene is a lot worse than it is in the U.S. However, we've seen some improvement there. And also, we've seen a significant improvement this year in inflation. As you remember, last year, the Fed started raising interest rates to counteract the inflation that a year ago, like June, we were over 9% inflation rate. Today, we're just under 4%, heading down still. But as always, that last mile of trying to get inflation completely under control is about the hardest to do. But good improvement has been made on the inflation front. When we look at U.S. gross domestic product, or GDP, we can see last year, and actually going all the way back to 2021, we were having very strong growth. However, the U.S. GDP is expected to slow going into the second half of 2023, but the good news, if you look at the middle of the chart, it remains and has remained positive. We currently came out of quarter two, at the end of June, with about a 2.4% growth in GDP. However, you see the trend from 21 to 22, it is slowing. And then what we're forecasting on the right side of the chart is where CNR, City National Rockdale, believes we're going to be going into the end of this year. They're expecting around a 0.5% growth rate in the third quarter, and actually the economy bottoming out by the end of this year and being slightly negative in growth. So that's the first sign of any potential negative growth. But they are forecasting the remainder of 2024 to show some positive growth, and all that is boding well for the markets because what this looked like a year ago was much worse than what we were seeing in GDP as we're seeing today. So just wanted to point out again that we believe that the economy is going to be bottoming out towards the end of this year, beginning of next year, and starting to form some sort of recovery.